Members, want to thank everyone for joining us today on the TradeXchange Week Ahead Weekend webinar. A quick recap of last week and then jumping into what's going on and what's coming for this week. Last week, U.S. markets saw a jump to end the week following comments by Fed's Bostic in regards to seeing only 25 basis point increments in future raises, also saying that the Fed could be in a position to pause by mid to late summer. Technical traders mentioned a key 200-day moving average level on the S&P that was not breached, which also gave a positive momentum for the market. All three indices ended the week up 2 to 3%. We also saw strength in the 10-year yield, breaking above 4% for the first time in 4 months, and the 2-year yield hitting highs of 4.94%, a level not seen since 2007. U.S. markets as well showed an upswing following positive economic data from the services sector, showing strongest readings since June of last year. China, in a way, helped markets also as they showed strong readings on their economic reports following their openings. We continue to show mixed results on the economy, which has kept it in a seesaw-type fashion in markets. Volume is there, but not seeing too much movement in any direction. Since earnings seasons for the big cap names basically is over, let's take a look at performance-wise on the S&P 500. S&P 500 companies posted an average earnings decline of 4.9%, the first quarterly decline since the third quarter of 2020. In that, energy was the strongest in the group. This week, it is all about the employment report on Friday and also the Fed Chair Powell semi-annual testimonies on Tuesday and Wednesday to the House and Senate. The Fed, keep in mind, members, is in a blackout period at the end of the week from March 11th to the 23rd, going into the FOMC announcement. So let's take a peek at your week ahead. Starting off with your, as always, upcoming U.S. and world events. On Monday, watching the factory orders. Overseas-wise, the EU retail sales and the RBA announcement. On Tuesday, on the U.S. side, consumer credit. And we also have the Fed Chair Powell speaking on their semi-annual monetary policy to the Senate. On Wednesday, we have your ADP employment, JOLTS job openings beige book, and the Fed Chair Powell speaking to the House. Overseas, watching Japan and Euro's GDP, Canada's BOC announcement, and China's CPI and PPI. On Thursday, Fed Speak Bar, as well as Japan's Bank of Japan announcement. Friday, the all-important key headline, your employment report. We also have some CPI data from Germany as well on Friday. As always, members, we have your company events and for the week, as well as your top conferences. If anyone has any questions or comments on those, you can always reach out to us via Ask the Desk or email. U.S. economic calendar, as we mentioned, not much on the Fed speak side going into this Fed blackout period. So it doesn't seem we're going to have that much action throughout the week on scheduled Fed events. As always, if there are any interviews or articles on them, we will present them and post them in the news desk. But the key thing we're watching this week, members, is all about the employment report on Friday. Seeing following that 500K plus last month, what that number will be this month. It will be a very key indication in a directional move in the markets moving forward. Your international economic calendar for the week. Earnings-wise, members, as you can see, earnings season slowly is coming to an end. A majority of the big cap names have reported. A lot of these are small cap names that are coming up to end the earnings season. Your fear and greed index, right on that neutral greed mindset with around a 55 reading. Seeing that continued mindset on the bullish side for now, going into this week, and the Fed Powell and the employment report on Friday. Your weekly sector performance, seeing strength across the board, a little weakness in utilities and consumer staples, but strength on especially in materials, technology, industrials, energy, and communication services. An industry comparison, this is around your COVID levels. We are continuing to see strength in markets, seeing a little uptick across the board on a 3-year basis. Unemployment rate, we did an unemployment rate figure just to give an idea in regards to the activity as of the past 40 years from 1980s on the unemployment side. Every time we did see an uptick in unemployment, we going into a recession, we always have seen an uptick on the unemployment side. So I'm guessing the thought process on the Fed is that is what they're looking for on the uptick to curb out a little on the inflation side. Going into your March meeting, members, currently we are expecting a 25 basis point hike around 71%. Some are seeing a possible 50 basis point, 28%. This could see a big move following Friday's numbers, so keep an eye on that. Your 10-year, 2-year at minus -0.89. Clearly, the mindset of recession, the question always comes down to, will it be a soft or hard landing? Year-to-date percent returns continue to see strength in all three indices, with the NASDAQ up over 11.5%, the S&P up close to 5.5%, the Dow upticking from last week's weakness, up spot 7.5%. We did see a big jump in gasoline this week, up close to 15.5%, up over 11.2% on gasoline. Copper an uptick, coffee saw a downtick. We did see a little uptick in gold, and then we saw as well uptick in crude oil. Last week, crude oil was down 5%, now basically almost flat to down less than 1%. So we are continuing to watch. One other interesting aspect is nat gas. Nat gas a few weeks back was down about 50%, now down about 32% going into this week. Your AAII investor sentiment survey did see a little uptick on the bullish mindset. But the interesting aspect of this is we did see a drop on the neutral mindset, but a big uptick in the bearish mindset. So we'll see what this how this correlates into market activity coming into this week. But right now, clearly, the mindset on this investor sentiment survey is on the bearish side. Sector outlook for year to date, compared from last week to on a 3-year basis, the weakest continue to be energy, consumer staples, healthcare, and utilities, as consumer discretionary, information tech, and communication services continue to be the strongest in the bunch. IPO lockup expiration, as well as your expected IPOs for the week. FDA calendar, not much initially. We'll be updating that throughout the week as always. Keep an eye on that moving forward. Now jumping into the charts, as we mentioned, members, this is going to be a very quick webinar. Not much action last week and not much going into this week except for Friday's action. Gold, no changes to the chart. Right now, did we mention this, in regards to gold? We mentioned for weeks on weeks, this is a pure technical chart. This is the 4th week in a row we mentioned that this chart has been technical. A downtrend break. We saw an upside move with strength right off of that support level. So we're watching gold right now. If we test this upside resistance or the bottom side support, which is we see a huge amount over here of support on this commodity and gold. So we're watching this closely on the upside resistance, or will we see a retest of that support level? SPY daily, no changes to the chart. Yet again, we tried to break, but the bulls came back and closed the SPY as above 400. We mentioned last week that is key for a close and break above 400 for the base range to stay intact. This level right here, and we mentioned that is a strong move on the bull side to see a move above 400 and to end the week with a close above that level. So we'll see if that bullish sentiment moves into this coming week. NASDAQ daily, no changes to the chart. Watching this NASDAQ, seeing once that uptrend was broken, we are seeing a little volatility and trading around this support 11.5 level, back and forth, up and down below this level. Did see strength above it closing at the end of the week, but we are in a very big range on the NASDAQ, and we're still waiting for any upside move above this key resistance or a break below this 11.250 level that could possibly see a retest of the 10,000s level. So we're watching NASDAQ very closely. SPY daily on a more technical and moving average look. Triple Qs as well on a technical moving average look, and your IWMs. 10-year yield daily on a moving average play, and a 10-year yield on a more technical look. No changes to the chart. A very interesting chart. We had a euphoric gap, I guess you can say, right here. Once that gap was filled to the downside, now we're back into a situation where we have an upside gap, but we have a nice support level right here above the 3.8%. So we're watching that very closely this week. What direction will this, will either Fed Chair Powell or the employment report take us? Will we fill the upside gap and continue to retest possible highs? Or are we going to test this support, breaking back to that huge support level that we saw around the 3.4 to 3.5%? Very key to watch this, as this is correlating into activity and volatility in the U.S. markets. Diamonds on a daily moving average and technical view. IWMs, no changes to the chart, members. We had this downtrend from last week that we were watching on an upside move. Once this downtrend was broken around that 190 level, we did see a straight shot up, closing the week at 191.50. The mindset right now on this is, will the bullishness continue above this downtrend break, or are we going to see a test around this mid 190, 195 level test and a retest of this big support that we've been watching that goes back months and months? That's on your IWMs. HYG daily on a moving average and technical look. S&P 500 daily, no changes to the chart, members. We continue to mention the past report that 4,000 is a level on watch. We've been watching it back and forth above this 4,000, breaking below it, retesting back above it, closing at highs. The S&P is in a broad range from 3,900 to 4,100. This downtrend that we're watching here on this 4,100 is key for an upside continuation. So we are watching this S&P 500 closely going into this employment report. VIX, as you can see, it's a pattern being built. The question comes down to, what is the next move? Are we going to break this pattern to the downside and go back to that 14 levels that were the norm years ago, or are we going to finally break back above and retest that volatility to the upside? It's key to watch this. It does add that volatility to markets, and we do follow that and provide those updates in the news desk. Oil, no changes to the chart. Crude oil continues to try and find its way. We ended the week right at resistance at that $80 level. Traders mentioned a possible backing and filling pattern going on here, which could possibly show a big move coming in either direction. We're watching that upside resistance and that downside support at 70s as a clear indication move in any direction in crude oil. US dollar, no changes to the chart. We added an uptrend last week to keep track of any possible directional moves. And what did we get? A break and a stall for now. We are seeing a possible range being built around this 105 level. We're going to be keeping a close eye on this, as we did have an uptrend break, which is typically a bearish situation, as we've seen last time when we had some breaks. But we are watching if we're going to be getting that possible break to the upside. That is what we're watching for in this previous move. And if it doesn't continue to the upside, the bearishness will take it back lower. So we're watching that closely in this range, and we'll be following that up in next week's report. Bitcoin, no changes to the chart. We could not break above that resistance level that was there for quite some time. Once that resistance level was not broken, we did see weakness ensue, breaking that support, ending at 22,240. SMH daily on a moving average and technical look. And we added a euro this week. We're going to keep adding new charts. If any member has any, any recommendations on a broader view index to add, always mention to us, shoot us a message, and we'll be adding those to the list. Euro. This is a very technical move in the euro. As you watch, this is an older chart that we used to have in our weekend report. Not much changes except for this downtrend that we added. Correction on that. We did add this downtrend on watching for the upside move. But every time we saw a trend line break, we did see activity happening. We saw the downside break here, action to the upside. The uptrend break here, action to the downside, right at that support. Right now, we're in a very tight support resistance range. We're watching this very closely on the 105s to the downside and 107s to the upside. So we're going to watch this very closely, as this does correlate as well with the US dollar. Remember, as we did mention, this will be a very quick weekend report. Not much activity last week. The key thing this week is just that report on Friday for the employment report. And as of course, we want to thank everyone for, as always, recommending newer charts to add to the list. We're going to continue to add more and more. If anyone has any, recommendations, as always, thank you. And we did have a recommendation regarding the Euro chart, and that's why we did add that to the list. Members, we're going to go on a quick mic silent. If anyone has any questions or comments, let us know. We have a few questions, as always, in the news desk. In our email. And if anyone has any questions, shoot us a message in the chat box. As always, one of the key questions that everyone asks is what our thought process is for the week. This week, members, we're continuing to watch a few of the economic reports. Some big ones we're going to be watching regarding factory orders, consumer credit, your ADP employment, your JOLTS job numbers, the beige book, the feeling on what's going on across many districts in the U.S. And then the only thing that really would matter this week is that employment report on Friday. What will that number be? Following that 500+ K report we had last time, not many people are expecting a number that high, and people are saying we're expecting something around the 200 ranges on a pullback. But we're watching to see what that number could be, watching the wage number, and then also watching these comments, if there are going to be any comments out by Jerome Powell during these testimonies. Usually there's nothing market moving, but these days, who really knows? In regards to the comments made by Fed's Powell. But that's what we're watching this week. Keep in mind as well, members, that we do have the Fed blackout period coming following this weekend, going into the FOMC report. So we could see this number, this employment report, dictating a lot of directional move going into that FOMC meeting. And the focus will be on economic reports moving forward. On the Fed side, members, our thought process is the same that it's been for the past few weeks. It seems like we're playing a good cop, bad cop mentality right now. The markets moved a huge amount on Thursday and Friday following commentary by Fed's Bostic, who is a non-member, a non-voter this year. But the commentary seems to be is, what do we want to hear? And right now, it's clear that the mindset is the bullish aspect of Fed commentary. We had other commentary throughout the week and this weekend of hawkish commentary from other Fed speakers. So it's interesting to see what the market will do going into that employment report on Friday. We had a question regarding the news desk. Any updates on the adding chat and the new features? Right now, members, we are finalizing the community chat. We're very, very excited to get that released. We do have we sent out a few emails in the past in regards to members beta testing that version. Once that beta is available, we'll be reaching out to a few members to beta test that before we do release it. But we're very excited to release the community chat room and updating the new Squawk features as well, coming up in the next week or two. So we do have a lot coming, a lot more waiting to be tested and released. So we have a very exciting 2023, for the TradeXchange and for all our members. So as always, members, if you have any, suggestions, recommendations for the TradeXchange, you can always reach out to us. We're always open and listening. And we thank everyone for being a part of the TradeXchange. We want to wish everyone a wonderful rest of the weekend. Enjoy, be safe. TradeXchange out.